Hello students, today we will be discussing the theoretical concepts related to the last chapter. So this chapter is called as tax and e-environment. So basically you are having more theoretical concepts in this chapter and you have also few problems related to TDS as well as advanced tax. Now only theoretical concepts related to the problems I will be explaining. In these chapters you have only problems related to TDS and advance payment. So only those theoretical concepts I will be explaining you in detail. Remaining will be asked only for 2 marks. So let us start with theoretical concepts related to TDS or tax deducted at source. Now, the full form of TDS stands for tax deducted at source. So basically, this TDS is also one of the form of direct taxes. This TDS is one of the mode of collecting the tax by which certain percentage of amount are deducted by the person at a time of making payment of specific nature from one person to another. So basically, TDS is called as tax deducted at source. Deducted at source in the sense it means that whenever one person is making payment to another person, before making the payment, out of the total amount which he is paying to another party, a certain percentage will be reduced or certain percentage will be deducted, and only the balance amount will be paid to the another party. The amount so deducted is called as tax deducted at source. Now, once this tax is deducted, the tax deducted has to be remitted to the government or tax authorities, and the rate of TDS ranges from 1% to 30%. So in case of TDS, it may range from 1% to 30%. Now, for example, let us understand through an example. Mr. A is an employer and Mr. B is an employee. So we have two parties here, Mr. A and Mr. B. Mr. A is employer who is running a particular business, and Mr. B is an employee who is working under Mr. A. Now, Mr. B is supposed to receive salary from Mr. A. Let us understand that the annual salary of Mr. B is amounting to 10 lakh rupees. So whenever Mr. A is making payment of salary to Mr. B, how much he should pay? He should be paying 10 lakh rupees because it is the annual salary. But this entire 10 lakh will not be directly paid to Mr. B. So while making payment of this 10 lakh rupees of annual salary, certain percentage of amount would be deducted in the form of TDS. So how this TDS will work in case of salary? The total annual salary of Mr. B is how much? It is 10 lakh rupees per annum. So this 10 lakh rupees will be divided by 12. So we will get the salary of one single month. So on that single month salary, again we have to add health and education cess of 4%. So the total TDS amount would be coming to 86,667. So that means out of this 10 lakh, whenever Mr. A is making payment to Mr. B as a salary, this entire 10 lakh rupees will not be received by Mr. B. So out of this 10 lakh, 86,667 rupees will be deducted in the form of TDS, and only the balance amount of 9,13,333 would be received by Mr. B. So this is how basically TDS will work. So that is why it is called as tax deducted at source. Now, next let us understand who is responsible to deduct TDS. So every person who is responsible for making payment of nature covered by TDS provision of Income Tax Act shall be responsible to deduct tax. So who should be deducting this TDS? Basically, there are certain payments and there are certain incomes in respect of which Income Tax Act says and TDS provisions of under the Income Tax says that compulsorily there should be certain percentage of amount which should be deducted in the form of TDS. So what are those payments and incomes? We will discuss later. Now, what is important here is we have to understand there are two parties involved in TDS. One is called as deductor and another person is called as deductee. Now, any person or an organization, company or a corporation who is making payment to another person, and while making this payment they deduct certain percentage of money and retain and deposit to government. So these people who retain or deduct the tax while making the payment are called as deductor. And there is another person, the person from whom the tax is deducted is called as deductee. So the person making payment and the person who is deducting certain amount of that payment is called as deductor, and another person who is receiving the balance amount after getting certain amount deducted is called as deductee. So this is the important thing which you have to understand. Now let us understand who can be deductor. Now uh, TDS must be deducted at a time of making payment in cash, check or crediting money to pay's account. So in whichever mode or whichever form you make the payment, TDS must be compulsorily or mandatorily deducted at a time of making payment. So whether you make the payment through check, you make the payment through cash, or you credit money from one account to another bank account, then in all these cases of payment, TDS must be compulsorily deducted. Now let us understand who can be deductor. So who is responsible to deduct TDS? So in case of company, basically a principal officer will be the person who will be appointed for making this deduction of TDS. In case if the principal officer is not appointed, then employer himself can deduct TDS. If the employer is also not deducting TDS, if there is any other employee who is making payment on behalf of the employer or on behalf of the company, then he will be supposed to deduct the amount of money while making payment. So in case of company, it will be either principal officer or employer or any other employee who is making payment on behalf of the company or employer. So they can be deductor. In case of government companies or government authorities, any person who is designated or appointed as drawing as disbursing officer, they will be responsible for making the deduction of TDS. Then in case of rent, what will happen, the tenant who is supposed to pay the rent, he will be deducting the amount of money. So in case of individual, what will happen, if he is paying rent either towards the use of asset or either towards use of land and building or plant and machinery for, so if the tenant has to pay to the landlord certain amount of money or to the owner of the asset or property, so he would be the person who would be deducting the amount of money. So he would be deductor in case of rent. Then again, let us understand what are the different payments and incomes on which the TDS is compulsorily deducted. Now, there are certain payments or incomes on which the compulsorily TDS has to be deducted. So, payment of salary. In case of payment of salary, again, TDS has to be mandatorily deducted. Then in case of lotteries, winnings from lotteries, horse races, crossword puzzles and card games, then again, in case of all these incomes, TDS, certain percentage of TDS will be deducted. Now, in case of interest from banks, if you are receiving any interest from banks means it is interest on term deposits, not on your regular savings bank deposits. So, in case if you are receiving interest from banks on term deposit, then again certain percentage of amount would be deducted in the form of TDS. Then again, if you are making any payment of commission, for example, LIC commission, insurance commission, and there are many types of commissions and brokerages. So, in case of payment of commissions and brokerages are also certain percentage of TDS has to be deducted. Then again, if you are making any payment to freelancers also, certain percentage of TDS would be deducted. Then again, in payment in case of LIC policy, suppose if you have invested money in LIC policy, let us assume it is an endowment policy and you are receiving certain income after certain years. So whenever you are receiving LIC income from LIC policy after the maturity period, then on that matured amount or sum assured also, there would be certain percentage of TDS deducted. Then again, the rent paid towards plant and machinery, land and building, furniture and fixtures also, TDS will be deducted. Then again, if there is any payment on transfer of certain immovable property, if there is any transfer of immovable property also, one person has to make the payment to another person, except agricultural land or farmland, certain percentage of TDS would be deducted. Then again, if there is any payment in respect of national savings scheme, then again, certain percentage of TDS would be deducted. Then again, if there is any some paid in the way of fee of professional services, fee for technical services, payment of royalty, remuneration to director or fees to director, in all these case of payments, again certain percentages of TDS would be mandatorily deducted. So in case of all these incomes and payments, compulsorily certain percentage of TDS would be deducted. Now again, let us understand in what cases or in what types of payments TDS is not deducted. So there are also certain payments which is excluded from TDS. So what are those payments which is excluded from TDS? We will understand now. Now, if you are making any payments to RBI or government to India, so any payment which is made to Reserve Bank of India and Government of India, TDS is not deducted. Then again, when interest is credited or paid to central bank or state financial corporations, or if there is any interest or payment made to banking companies, then again on such payments or on such interest, then again TDS is not deducted. Then again, any interest paid under direct taxes or refund from IT department, there would be no TDS deducted. Suppose if you are claiming refund from the income tax authorities on such income or on such payments, TDS won't be deducted. Then again, when there is any payment which is made to Unit Trust of India, Life Insurance Corporation or any other insurance company and cooperative societies, then again TDS will be not deducted. Then again, interest earned and received from a recurring deposit account and savings bank account, again on such interest you will not be deducting any TDS. I told you before itself, interest earned on term deposits or fixed deposits, TDS would be deducted. But whatever interest you receive or earn on recurring deposits and normal savings bank account, then on such interest income, no TDS would be deducted. Then again, interest earned on savings account in cooperative societies in banks. Suppose if you are saving any money and again on that if you are receiving any interest in cooperative societies and banks, then again on such interest amount there would be no TDS deducted. Then again interest earned in non-resident rupee account. Suppose if there is any NRE account maintained in terms of rupee denomination or rupee account, then again interest on earned on that account would not be there would not be any TDS deducted. Then again interest earned on certain government securities like Indra Vikas Patra, Kisan Vikas Patra or National Savings Certificate, again no TDS would be deducted. Now again there is something called as TDS certificate. Now as per section 203 of the Income Tax Act, the TDS deductor has to furnish a certificate of TDS payment to deductee or payee. Suppose if I am a deductor and if I am making payment to some other party, now I would reduce some amount and only the balance amount of money will be paid to another party. So whatever amount I retain or deduct and which I remit ultimately to the government or tax authorities, on such amount a TDS certificate has to obtain by me and I have to submit or give it to the deductee, and such certificate is called as TDS certificate. Now again in case of individuals and companies also, whatever TDS or whenever TDS is deducted in respect of any sort of payments, it will be automatically reflected in a form called as form 26AS. In case of salaries, you can also view the amount of TDS deducted in form 69, form 16A. Now again TDS amount so deducted at a time of making payments must be deposited to the government within the specified due dates. So it is also important that we have to remember that whenever we deduct TDS, there are certain due dates. So within these due dates, the deductor has to deposit or remit the amount to the government. And once this deposit is done, the TDS return should be filed within the due dates. So for depositing the TDS amount and for filing the TDS returns, for both again there are certain due dates which is given as per the provisions of TDS under the Income Tax Act. So what are these due dates? Again we will understand now. Now let us understand the due date for submission of TDS returns. So once the amount of TDS is deposited to the government, you have to again file TDS returns, and when you have to file TDS returns, now we will understand. Now in a year basically there would be 4 quarters. The first quarter will be ending on June 30th, second quarter would be ending on September 30th, third quarter on December 31st, and fourth quarter on 31st. Now if you are for the first quarter, the TDS return should be filed, the due date for filing a TDS return should be July 31st. That means if you have made any deduction of TDS or remitted any TDS in the first quarter, so in the first 3 months of the first quarter, if you have deducted any TDS, the due date for submitting the TDS returns would be July 31st. And for the second quarter, which is ending on September 30th, the due date of submitting the TDS returns would be October 31st. And for December, then the third quarter ending on December 31st, the due date for submission of TDS returns is January 31st. And for last quarter, for which is ending on March 31st, the submission of TDS returns would be May 31st. So these are the due dates. So this is very important. You have to remember the due dates of filing TDS returns. Now, similarly, there are due dates for deposit of TDS. So after deducting the TDS amount, what is the due date within which the deductor has to deposit the money or remit the money to the government? We have to understand. Now, we have to understand different situations. The first situation is if the TDS is deducted by the government. So in case if the case of government, disbursing officer would be there, so it would be deducting the TDS. So if the TDS is deducted by the government, the time limit for remitting or depositing the tax is, if the tax is paid without production of IT challan, then it has to be deposited same day. So if the tax is paid without IT challan, if it is paid or remitted directly, then on the same day of deducting TDS, on the same day you have to remit to the government. That means if the government is deducting TDS today, on the very same day it has to remit the money to the government. Then again, if the tax is paid with the production of IT challan, tax should be deposited within the 7 days from the end of the month in which the tax is deducted. Now, if you are paying the tax through production of IT challan or income tax challan, then again you will be given the time limit of 7 days from the end of the month in which the tax is deducted. That means if I deduct tax today and I am making payment and I am producing IT challan, that means after this month gets over, I will be getting another 7 days after the end of this month to make the deposit TDS or remit the amount of money to government. So this is in case of TDS deducted by the government. Now there is another situation if the TDS is deducted by the person other than government. So if the If there is any other person who is deducting TDS apart from government, then again let us look at what is the time limit. If the amount is paid in the month of March, tax should be deposited by April 30th. So if there is any amount which is if there is any payment made and deduction done for such payment, where then again in the month of March, then the tax should be deposited by the April 30th, that is next month. Then again, if the amount is paid before March 1st, or if the money is deducted for the same, tax should be deposited within 7 days from the end of the month in which the tax is deducted. So apart from March, if TDS is deducted in any month apart from March, so basically in all those cases, what will happen? Again, from the end of that month, 7 days after the end of that particular month in which the TDS is deducted, 7 days extra would be given in the next month, in which within which the TDS amount has to be deducted. Sorry, TDS amount has to be deposited to the government. Then now let us understand interest penalty and late filing fees of TDS. So in case if you are not deposited at TDS by the correct date, then the following penalties are applicable. So you deduct TDS while making the payment. So as a deductor, you have already deducted the certain amount of money in the form of TDS. But if you are not depositing or remitting to government by the due dates, then again some certain penalties will be applicable. Now late filing fee will be applicable if you do not file by the deadline. So in case if you have deducted TDS and if you are not uh, depositing the money within the given due dates, then again you have to pay extra amount in the form of late filing fee. Then again interest should be levied if you do not deposit a TDS amount in time. So if you do not deposit a TDS amount within the specified due dates, then again you have to pay certain amount of interest. Then again penalty would be levied if the TDS is not filed within 1 year of the due date. So again extra penalty will be levied if you are not filing the TDS returns within the due dates. Now late filing fee as well as penalty is related to late filing of TDS returns, and interest will be paid in case if you are not depositing the money within the time. Now let us understand all these three things in detail. Late filing fee. So first thing which you have to understand is late filing fee. So under section 234E, you will have to pay a fine of rupees 200 per day until your return is filed. That means if you are not filing your TDS returns, you may already have deposited a TDS amount, but after depositing you have to file within the due date. So in case, in spite of depositing the money of TDS, if you are not filing your TDS returns within the stipulated due dates, then again you will be levied an extra fine or late filing fee of rupees 200 day for every day till you make the payment of till you file the TDS returns. So this is first type of penalty. Then again you have interest. Now again in case of interest, if there is non-deduction of TDS at source either in whole or part, that means if you are making payment and if you fail to deduct TDS either in part or whole, that means if you have not deducted any TDS at all, or if you have deducted TDS at the wrong rate, so in both the cases a simple interest of 1% per month will be levied. Then again after deduction of tax and non-payment of tax either in whole or part, if you have deducted, then but if you have deducted but not made a payment in part or full, so in such case of non-deposit or non-remittance of TDS after making deductions, then again simple interest of rupees 1.5% month will be levied till you make the payment of or remittance of TDS to the tax authorities. Then again penalty or late filing fee for filing TDS returns. So in case if you are filing your TDS returns after the due dates, then again extra penalty would be levied. Now under section 234E, it says the deductor will be liable to pay a fee of rupees 200 per day for the failure to pay the TDS continues till the day in which you make the payment. Then again penalty under section 271H has to be paid. Now assessing under this section, assessing officer may direct a person who fails to file a statement of TDS within the due date to pay penalty of minimum of rupees 10,000 or which may be extended to rupees 1 lakh rupees. Now in case if you are not filing any TDS returns after the within the specified due dates, then assessing officer under section 271H may also have the power to levy a penalty of minimum 10,000 and maximum of rupees 1 lakh rupees. So these are certain things which you have to remember in case of TDS. Now this chart will explain you different rates of TDS and what is different types of payments in respect of which TDS has to be deducted, as well as what is the different percentage or rates of TDS which has to be deducted by the deductor. Now in case of sale of immovable property, if you are selling any immovable property which is beyond 50 lakh rupees, then 1% of the TDS will be levied or 1% of the TDS amount will be deducted from the sale amount of immovable property. Then in case of amount of LIC policy, if it is exceeding 1 lakh rupees, 1% of TDS would be deducted. And if there is any payment being made to contractor, then 1% of the TDS would be deducted in case of individual. Then in case of others, that means in case of companies, if they are making payment to a contractor, then again 2% of TDS would be deducted. Now again commission and brokerage. So in case of commission and brokerage, in both case of individual as well as company, 5% of TDS would be deducted if the commission or brokerage amount is more than 15,000 rupees. Then again rent from building paid by individual, if it is exceeding 50,000 per month, then again 5% of the TDS would be deducted. Then again in case of insurance commission, which is insurance commission which is paid to an individual, then if it is exceeding 15,000 rupees, if the commission amount or insurance commission amount exceeds 15,000 rupees, then again 5% in case of individual. In case of company, it will be 10%. Then again interest on securities, if it exceeds 10,000 rupees, then 10% of TDS will be deducted. And professional and technical fees, if the payment is more than 30,000, then again TDS amount of 10% would be deducted. Then refund from national savings scheme, if the amount is more than 2,500, and 10% in both the cases. Then compulsory acquisition of land, if it is exceeding 2,50,000 rupees, in both the cases 10% of TDS would be deducted. Then withdrawal from employee provident fund, it is more than 50,000. See, if you are withdrawing money from your own employee provident fund also, then again if you are withdrawing more than 50,000 rupees, they will not get you will not receive the entire 50,000. They will deduct 10% in the form of TDS, and only balance amount will be given. So 10% on 50,000 will be 5,000. So you will be receiving only 45,000. So please be careful tomorrow if you are withdrawing from provident fund, in case if you are earning. So please don't withdraw more than 50,000. Then again in case of interest on bank deposits, that is on term deposits, if it is exceeding beyond 10,000, 10% of the TDS would be deducted. Now again last one, interest on winnings from lottery horse race. So in case of any gambling, crossword puzzles, lottery, so in case of all casual incomes, if you receive more than 10,000 as a prize money, so in this case 30% of the TDS would be deducted. So this is about TDS. Hope you have understood. Thank you so much.